the market itself is not corrected much, as we've been discussing. But the part of the market which has really collapsed is all these new digital IPOs. And that's the one which is causing a lot of discomfort for many of these IPO investors of 2021, whether it's the Paytms or Zomatos or now even the Nykas of the world. Do you think these prices have adjusted enough? The reset has happened, or do you see even more price erosion happening in these names?
The reason why the price correction is happening, remember, these are companies with very back-ended cash flows. So currently, many of them, barring Nykaa, they don't make any profits. It is expected that in the future they will make profits. And whenever interest rates go up, logically should also be working with higher, WACC or discount rate, which essentially means that any company which has very back-ended cash flows, you will see a deep dash in the or deep cut in the balance sheet of that particular company. So it's simple, DCFs, whatever is working out over here. Companies which have a lot more, upfront cash flows, if you increase the WACC by let's 100 basis points, you will not see that data cut in the valuation. But any company with negative cash flows in the foreseeable future, a lot of value coming in the future and in the terminal value, to cut the WACC, valuation goes down dramatically. So I suppose that's what is going on over here. People are just building in higher discount rates for the market in general and more specifically for these companies. So that's a challenge. And honestly, on the price front, it's slightly tricky, to take a call in these companies because as of now, we don't have too much of, visibility on, I wouldn't say visibility, but, when do they actually start turning profitable, whether it happens in the time frame with the market in the surging or things get, pushed back for whatever reason that may be. So I guess the market will simply start assuming a much higher cost of capital or discount factor for these companies.
Sanjeev, are you keeping an eye on commodities? What's your view on crude with the backdrop of what's happening in Ukraine and the geopolitical scenario?
I assume some of the geopolitical risk is already priced in, but of course, the risk is something actually going wrong, and then the Western countries coming in imposing some sort of sanctions on Russia in whatever form that may be. And I don't know how that affects Russia's supplies of oil and gas because things are very tight as of now, as we know anyway. If you look at the supply-demand balance for crude for calendar 22, I should say, that is incremental demand is somewhere about 3.3 million barrels per day. Non-OPEC incremental supply would be somewhere about 2.7. So obviously you still have to depend on OPEC supply to rebalance the market, and for whatever reason, Russia supplies goes down, and that's actually the biggest producer of oil globally. So that can have a very dramatic impact on the market. I hope all that negative news is already priced in, and actually things cool off from where we are.